Hello traders, in this video I'm going to show you the results so far of me trading off of the S&P 500 since May 25th, 2022 with a self-written trading plan where I take the exact same trade every single day. Some days there are no trades triggered, but I always have orders out there, so the potential to be in a trade every day is always there. Everything is automated. My orders are out there. They either get filled or they don't. At the end of the trading day, I close out the position for a win or a loss, or if I get stopped out, that happens automatically. So there's very little effort by the trader. You don't have to wait to find out, is this thing profitable? Does it work? You can see right in front of me, this is the year-to-date results, and all we've been trading is SPXL this year. That's why I have it set to year-to-date. And to show you, of course, what we've done so far this year. So let's look at the components here and the trading P&L. Let's set this to year to date, and you'll see that the only thing that I have been trading this year is SPXL, using my SPXL trading plan. Are the results, is the P&L extremely impressive? No, it's not, but it's obviously profitable, and what we're doing is easing our way into increasing share size and increasing the account size. As this trading plan continues to prove itself, we've already taken 111 trades doing the exact same thing on every single trade. So that is statistically significant. But the closer we get to 1,000 trades, that's where we know that, hey, this thing really works long term. And yeah, that's going to take a long time, but I'm going to continue to ease into the position size and share size, as I've said, as this continues to prove itself. So let's go to this Word document here, and some things I want to talk about beside the results at the outset of this video is that coming up in May 2023, that's going to be the mark of 3 full years of my trading career. So I started trading in 2020, a little bit after the pandemic fall off, because that was just a kind of an opportune time in my life where I was finishing up my bachelor's degree in physics, and I had the summer off before I started my master's degree. And that was the first time in so many years where I had a summer where there were no classes for me to take or anything like that. So I thought, you know what? I've always been interested in day trading. Let me read up on it. Let me study it, see if I can do anything. And the rest is history. So anyway, in that time, those 3 years of trading, I'm going to share with you some of the key points that I've learned. First, being a profitable trader is much less about the desire to be profitable and much more about recognizing your own limitations as a trader and as a person. Number 2, then you must figure out how to keep those limitations from hurting your progress. These are somewhat vague, but you really need to kind of have a general idea of things before you can get down into the specifics. Number 3, basing a trading strategy / plan. I put that slash there because some people use those terms interchangeably. They're not the same thing, but for the purposes of this point, we can consider them to be the same thing. So if you just base your trading plan or strategy off of technical analysis and or indicators and or news, again, those and ors is because there is a misconception. It seems to make sense logically that when you combine things like a pattern, a candlestick pattern, an indicator, some news, something else, that you're more likely to win the trade. And that just simply isn't true. It's kind of a false sense of, I don't want to say security, but a false sense of confidence that the trade is going to work. And then when it doesn't work, you're so much more likely to revenge trade or do something silly because you thought, well, I had all these things in my favor and it didn't work out. Now I want to get that money back because it should have worked. And so it's a very dangerous thing to get caught up into, is to think that you are increasing the chances of the trade working out by combining all of these different elements. And the only way to really know if any set of indicators or price action or patterns work is to use that same set 100 times in a row the exact same way. And if you found out, hey, I'm profitable, then there is a chance that that could work in the long run. But you still don't know, because usually when people do that, they trade off of many different ticker symbols, and those ticker symbols could wildly change their price action throughout the course of a year or many years. Simply, look at Tesla or look at AMC or any individual stock, and you'll notice that it's very hard to get a long-term sense of what's going to happen. And that's why this trading plan that I have really settled on just uses the S&P 500 price action. That is a very reliable kind of model of price action over a long period of time. So number 4, assume nothing works. There might be some spelling errors here, but I think you guys can figure out what I'm trying to say. Assume nothing works until you prove that it does after taking at least 100 trades of the same exact trades with your own real money. So again, many people out there like to make claims that if you trade this pattern and you combine this indicator and you wait for some type of confirmation or something like that, that this will work out 70% of the time. And that is just never, ever true. And you can prove that yourself pretty quickly if you start trading some pattern or whatever system that someone tells you and start tracking your data. You'll just find out right away that that doesn't hold up in the long term. So anyway, I think that's clear. 5, once you prove a strategy works with 100 of the exact same trades, then stick to it. So this is discipline. Stick to it unless you encounter a large trade sample size of 100 trades or more that are unprofitable. So basically what that's saying is that once you have a strategy that you have proven, that then you could still become unprofitable if you don't trust it or you don't believe that it works. And there's really no reason you shouldn't. If you have 100 trades that you've taken yourself of sample data, then there's really nothing better than that, even though there may be some ebbs and flows in the market that make you think maybe for a period of 10 trades or 20 or 30 trades or a quarter that it's unprofitable. Maybe this thing doesn't work. And I'll show you where that's happened to me and the results in just a little bit. But I have never deviated from this plan since I started trading it back in May 25th of 2022. So all of that stuff is exactly how I developed the SPXL trading plan. And now we can look at a summary of the results, and we'll go to my spreadsheet in just a little bit. It's probably a good time to tell you, just, I shouldn't assume that everyone's watching this right now knows what SPXL is. That's a 3 times leveraged ETF. Let's look at the charts real quick. Actually, we'll go to this chart page here. So this is SPXL, and you can see up here in kind of the subtitle, this is the name of the product, and it's an S&P 500 bull ETF. So that means that it is tracking the movements in the same direction. So there's bull and bear ETFs. The bear ETFs are inverse ETFs, but the bull ETFs are going in the same direction, but it's leveraged 3 times. So kind of a proportionality scenario where if the S&P 500 goes up 1%, this will go up 3%. But likewise, if the S&P 500 goes down 1%, this will go down 3%. And over time, there could be some wild discrepancies. So the SPXL or any leveraged ETF is not a good long-term hold. So what I mean by that is, let's say over a year, if the S&P 500 goes up 20%, that the SPXL may or may not go up that 60%. There's always caveats there, so you really have to understand what's going on here. But to trade this trading plan, you don't, because it only holds the trades for 1 day. So we always do get that 3% proportionality to the S&P 500, and that's one of the big benefits of this. So once I decided that, hey, I think I might want to trade SPXL, I decided to backtest this during the worst market conditions that I had seen since I started 3 years ago, and that was the trading that we saw from the beginning of 2022 all the way till I started trading this with real money on May 25th. So I did all of my back testing in this area where you can see that there was an obvious overall downtrend. So SPXL lost a lot of money in this time. You could see here there was a high of 146.92, and then down here toward the end we're somewhere around $75 per share. So huge loss in that period of time, yet my backtesting showed that we were profitable. I do have the backtesting spreadsheet here, and it's pretty rough looking, but this is where I just kind of collected all of the data of the trades during that period and found out that we were profitable, $27.50 per share. And this brings up another great point, is that seems really decent in that short period of trades to make $27.50 per share. But that's where forward testing really has to come in, because back testing inherently is inaccurate, and it just kind of gives you the indication that you may be onto something. But then you have to tread lightly with forward testing, which is taking trades of one single share with real money and collecting the data from those trades. And after 100 trades, if you find out you are profitable, then you could really be onto something and continue on. once we hit 100 trades, I think our P&L was about $13 per share. So you could see that the real results were a lot not as good as the back-tested results, but still profitable. So the forward testing, it happened between here and I don't think I have the end of it marked out where trade number 100 was, but it was somewhere in March, early March, like somewhere around here, basically. So that's SPXL. And hopefully that I'm trying to get through a lot in this video, but let me know if you have any questions about what SPXL is and how it kind of mimics the S&P 500 movement, and why I'm trading it with this plan. The main reason is because we get 3 times the leverage. So whatever our profits are with the SPXL trading plan, our profits would be 1/3 of that if we were using any other S&P 500 product that just trades a 1-to-1 ratio against the S&P 500. So hopefully that is clear. Let's go back to this. I want to make sure that I stay on track and cover everything. So in the time that I have been trading, we kind of talked about this a little bit. The first trade was taken May 25th, 2022. That was the beginning of the forward testing. The most recent trade number 111, was made on March 31st, 2023. And that time, the S&P 500 itself is now up 3.3%. That's based on these closing price dates. And SPXL itself is down almost 6%. Again, that's because of something called decay. And then that's something you get with leveraged ETFs. And I can't, that could be like a whole nother video. In that time, the SPXL trading plan, what I've been trading, is up 20.35%. So that's huge when you consider the S&P 500 itself is only up 3%. Now, we're not always going to be above the S&P 500 if we get a bull period where the market just trends upward, like we saw from the pandemic recovery, where things just went up and up and up long term. We are probably not going to beat the S&P 500 in that scenario, but I'm absolutely fine with that, because during times where the S&P is dropping and if we were just buying and holding, we'd be sitting on huge losses, worrying about when the market is going to reverse and if it's going to reverse. This SPXL trading plan does not suffer from that. It was profitable during this time, and it's been profitable since day one that I've been forward testing it, even though there have been smaller periods of unprofitability. We'll see that on the spreadsheet. So to me, the fact that we know that we are always going to be profitable no matter what the S&P 500 is doing, that is reason enough for me to be okay with the fact that during these crazy bull runs, we might not beat the S&P 500. We probably won't, and that's okay. So that's out of the way. But you can see right now we are beating it by a whole lot. And then my favorite things about the SPXL trading plan, I went over this in the last video, but I've added a few. It requires no predictions to be made by the trader, and that's good because predictions don't really work in the long run. No trade lasts longer than a single trading day, so we're all cash at the end of the day. The great thing about that is there are huge gaps that sometimes occur in the aftermarket or pre-market, and you can open up either wildly above or below where the price was the day before, and that could cause a huge loss or possibly a huge win the next day. But it's a very stressful place to be, to hold shares overnight, because you just don't know what's going to happen. So that's, again, another huge benefit of this trading plan. There's never more than one trade in a single day. If you get stopped out, you're done. That's it. You don't have to do anything else other than place your orders for the next day. That's all. There's zero emotion, zero guesswork, psychology, or news catalyst involved in this trading plan. All of those things, whenever you think you have to use kind of a gut feeling about what the market is going to do tomorrow, develop a market bias, or try to decide if news is good or bad or what it's going to do to the price, those are all very dangerous scenarios where you can become really emotionally and psychologically vested in a trading idea. And then when you execute that trading idea and it fails, that's where traders fall into revenge trading and all kinds of bad things happen. So that is another huge thing that I love about this SPXL trading plan. I just simply do what the trading plan tells me to do. And although there may be losing streaks, we'll see those on the spreadsheet here and there. In time, the SPXL trading plan has proven profitable. Time and effort are almost zero. It takes about 1 minute per day to place or adjust or close a position, and we don't need to watch the charts at all. I have a day job. I can't be around watching the charts, and I really don't want to be. There was that time, when I first started trading where I just sat and watched charts all day and, tried to take trades throughout the day. And at first, that's very fun. It's very exciting. After a while, that becomes kind of a prison. That you feel like you must sit there all day long, and when things aren't going your way, it could really be kind of hell on earth type of scenario. So that's another beautiful thing about this trading plan, is you're just not locked into the charts all day long. So let's take a look at the spreadsheet now, and let's look at the year-to-date results. I broke up all of the data, so you can see here's my overall trade tracker that tracks every single trade from trade number 1 all the way to trade number 111, and then on year-to-date trading, the trade tracker is from trade number 81 to 111. So these are just the trades that we've taken this year. And we finished up March. We finished up the quarter March P&L. This P&L is per share. So don't think, wow, this guy only made $5. No, it depends on the number of shares that you're trading. If you're trading 10 shares, you would have made $50 this month. If you're trading 100 shares, you would have made $500, so on and so forth. And yet you would need a considerably large account to trade those numbers of shares, but it's definitely possible in the long run. It will take a little time to get there, but I think slow and steady wins the race when it comes to trading, despite all of the kind of get-rich-quick schemes that there seem to be out there in the YouTube trading community. So our year-to-date results were up $8.80 per share, and trading days, there have been 59. We've taken 31 trades, so that's just to give you an idea of how often this thing gets triggered, about 50% of the time. But you can see if you look throughout here, this is where I track, was the trade profitable or not. So if there's nothing there, then that means there was no trade. But we have many days where we have 3 trades in a row. And our win rate is about 58%, which again is lower than our back-tested win rate was around 65%. But as I said before, back-testing is inherently flawed and inaccurate. And that's why forward testing and slow increases in position size once you finish your forward testing is so important. 18 wins, 13 losses. That's just this year alone. And total trades 31. Average cost, that's based off of the share price, $69.43. And considering that average cost, our return on investment is 12.67%. And that's just in the first quarter. If you extrapolate that, we could be somewhere around 40%. I'm hesitant to say that, though, because there could be ebbs and flows. There could be quarters where we're red. But I do have a feeling that if we enter into a bull market, that the kind of return we'll see per year is going to be somewhere in the 40, maybe even 60% range. But we'll have to wait and see. And, of course, I will report on those results once we get into a market like that. But this is where we are right now in the first quarter. So that's great as far as I'm concerned, 12.67%. And this is a safe, reliable way to trade. It's kind of more like active investing than it is active trading, but it is still technically day trading. Our average loss is $1.27 per share. Our average win is $1.35 per share. So for this year, our win to loss ratio is 1.06. Which is great. That's a lot better than our overall, and you'll see that on the full spreadsheet once we see that in a second. Average P&L per share per trade, 28 cents. That considers the losses as well. That's not just the winners. And if you look at the P&L curve here, you can see at the beginning of the year, this thing did drop below 0. But overall, we've never been below 0. That is just starting at the beginning of the year. Again, you'll see that on the full spreadsheet in just a moment. But you can see the overall trend is looking very good for the year. So I'm extremely encouraged and excited about what's happened so far this year. I've got the monthly P&L here. I don't really care about that. All I care about is long term. But I just like to show you guys this so you can see there's going to be fluctuations, and to show you that short-term results don't necessarily mean anything. So January P&L is there. Again, that's per share. February P&L, that's red, that's per share. You may think that looks like almost break even, but remember, per share. So if you're trading 100 trades, that's like an $82 loss. So that could be significant. And then here's our March P&L. And let's look at the overall trade tracker. There's a couple more things on here, like our quarterly results and also the P&L curve. So this is the part of the curve we were looking at just a minute ago on the year-to-date results. That's all right here. but our overall P&L curve is much more erratic from day one back here, and we had a lot of big winners right at the outset. And again, that's why you really need to ease into a trading plan. You could see that our P&L per share was quite huge just after the first few trades, and that could be very deceiving and very dangerous if you get into something with overconfidence, where you just take too many trades, too many shares, too large a position size. We just traded one single share until we proved this thing. So anyway, this is our overall P&L curve. We're heading back up to previous highs, but you can see it's been a very long time since we've been at all-time highs. And this period right here was where things got really kind of sketchy and scary. Again, never going below zero overall. But it was scary, and it was kind of tempting to think that maybe this thing doesn't work. But again, you can see overall it does work. Let's look at the overall results up here, and then we'll scroll down the spreadsheet and look at a couple more details. So P&L per share overall, we're up $14.50. So again, if you're trading with 10 shares, you'd be up $140. 100 shares, $1,400, 1,000 shares, $14,000, so on and so forth. Win rate is about the same as it is year to date. And wins and losses, total trades, average cost per share, $71.27. And based on that, our ROI is now up 20.35%. That is in less than 1 year's time. May 25th, 2023 will be 1 full year of trading this trading plan. And that is where, I can start to say, hey, here's what we can expect year to year. Of course, this has been an unprecedented year of really difficult market trading conditions. So just the fact that we're profitable is great. So I think that in years to come, when we hit bull markets again, that our ROI will be even higher than this, considerably higher. Average loss, $1.82 per share. Average win, $1.51 per share. So you can see the results were not as good as they have been year to date, and that's again because of this kind of really difficult period where, again, keep in mind, we're doing the same thing on every single trade. So this fluctuation in P&L is all based on the market conditions, not what we're doing or because I was doing something wrong at the time. Nothing to do with that. We're just seeing how the market coincides with the trading plan. Average P&L per share per trade, 12 cents. Again, that factors in the losses. So as long as that's a positive number, this thing is profitable. And our win-loss ratio is now exactly what this came from our back-tested win-loss ratio. Let's see. Is that up here? I think I might have just calculated it and put it on the spreadsheet. So it's not on this spreadsheet, but that's where that number comes from. And we are matching it now overall. But again, this is much lower than the year-to-date, where we are, our wins are 1.06% larger than, 106% or 1.06 times our losers. Sorry about that. And if we scroll down, we can see our monthly P&L, and you're going to see some red months in there. Again, these are per share prices, but the quarter 2 of 2022 was profitable overall. July P&L per share, August P&L per share, September P&L per share, but here's 2022 quarter 3, it was still green. October P&L per share. So you can see there was quite a few red months. And again, we're getting into this area of the P&L curve. So November P&L, we got green again. And then December P&L, that was the worst month we've ever had. And that made us have a red quarter for the first time. But again, 2022 overall, we were profitable, but things were definitely a little scary at that time. But because I had back-tested data, forward-tested data, I just kept doing the exact same thing. January was green. P&L, this is for the whole year. This is for this year. February P&L, that was red. March P&L, green. We saw that on the year-to-date chart. In 2023, quarter 1, up $8.80. And once again, overall, we are up $14.50 per share. So hopefully that is everything. I tried to cover it all. Let me know if you have any questions down below. This trading plan and eventually this spreadsheet or a very similar one is all available on patreon.com/tradingarmor if you're interested. If you have any questions about anything I said in this video, let me know in the comment section below. Hopefully this video was helpful to you. The main message that I like to share with everyone in every video is that you have to have a trading plan going into every trade, whether it works or not. At least if you're trading with a plan and tracking your data and your results, you could be making progress towards a profitable trading plan in the long run. If you're just doing random things, you're going to get random results. So always go into every single trade with a plan, stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.